Hey everyone, so it is now January 2021, and I wanted to put something together that talks about how everything went in the real estate market down here in South Florida for 2020, as well as what some of the industry experts are expecting for 2021. Let's jump right in. So a writer for the Miami Herald put together an article in late December discussing how things have been down here. He did a great job, so I'm going to cite a lot of his. He indicates that single-family homes in Miami-Dade had surged to an all-time high of $450,000 in November. Metrics in real estate are sort of lagging, meaning in December we get November's numbers, and in January we'll get December's numbers, so those aren't out yet. That's why I'm using November. That 450 represented a 23% year-over-year increase in house prices, which are median sales, which is great. Condos similarly saw a 10% rise, not 23, but 10% rise as well. Broward was equally high. Overall number of home sales in Miami-Dade was a 20% jump from November, so the year before is 20% year over year as well. Taking a quick look at what that looks like. So looking specifically at Miami-Dade County, single-family homes, we've got about 3,500 active, you can see down here, 3,500 active matches, so active listings at the moment. And if we're looking at only the median and below, we have less than 1,000 to work with. That's absolutely a seller's market, and what we're seeing frequently now are a lot of bid wars. We've seen it all throughout 2020, but the bid wars have not stopped. Fortunately, though, cash transactions have tipped down a little bit in November. All cash sales. Miami-Dade is the capital for all cash sales within the United States. We're definitely above the national average. But we did dip down to 29% versus 35% from November the year before. It's about a 16% drop. Now, all this has depleted our single-family inventory, and we're now down to about 3.6 months worth of inventory. A healthy market, balanced market being somewhere around the 6 or so month mark. This is not true for the condominium market in Miami-Dade. We're sitting about 13 months there. It is definitely a buyer's market there within the condominium subsection. Taking a look at what some of the industry experts are saying for the market down here for this year, 2021. First of all, once again, sales dollar volume, another metric. We're 50% higher in each county, Miami-Dade, Palm Beach, and Broward County from November as opposed to November this period last year, or rather the year before, 2019. We have Dora Puig, the founder of Lux Realty, expecting it to peak in the second quarter of 2020. Mike Pappas, the CEO of Kai's company that I'm with, saying that indicators are showing that we will sell more units in 2021 than what was sold in 2020, and prices will continue to appreciate. Nathan Zetter with Coldwell Banker is saying that if the single-family market does get too expensive, he expects condos to represent value. Phil Gutman of Brown Harris Stevens in Miami is expecting to see a new boom here. Ignacio Diaz, which is the director of Group P6, which is a development company that has done a lot of work in Florida, Venezuela, and Portugal, is saying that he's expecting the price inflation we are seeing to continue. Jim Cohen, president of Fontainebleau, is saying that he's expecting there to be better days ahead, and that the cost of construction hasn't come down yet either, which is also going to be inflationary. Nancy Clark-Corey with Coldwell Banker is saying a high-end buyer is also looking at California, New York, and Colorado, and comparing to those, we're not necessarily overvalued, and that she's not feeling a peak at this point. Alicia La Madrid with Severa Real Estate is referring to this as the love side of the cyclical curve that we are currently on. And Rishi Kapoor, who is the CEO of Location Ventures, is saying the pandemic and government policies in other states have turned South Florida into the hottest single-family home and condo market in the country. Checking out what some of the medical and tech experts are saying. CEO of Baptist Health, Brian Keeley, recently said in an interview that in a nutshell, he sees Miami headed for a renaissance in the second half of 2021. His reasoning is unleashing vast pent-up demand for hospitality industry, airlines, and all healthcare services beyond those used for the coronavirus. He's basing a lot of his confidence on the effectivity rate of the coronavirus vaccine relative to other vaccines. Now, as far as tech experts, recently there was a retweet from Mayor Francis Suarez of the city of Miami. Somebody had suggested bringing Silicon Valley down to Miami, and he retweeted it asking how he'd be able to help. One of the things that a lot of the tech CEOs are kind of citing as their interest in Miami is the entrepreneurial ecosystem down here. And Mayor Suarez, with the goal of being more resilient to pandemics and civil disturbances, etc., is attempting to make the economy of tomorrow, he calls it. and has said that he, in 2021 and this year, will be appointing a chief technology officer to help with the overwhelming response and interest of this. Checking out the Business Journal, they recently did a study of some of Redfin's data of about 2 million Redfin users, and they found that Miami ranked 9th in Redfin's list of cities where users were looking to move. They found that Miami had about 3,200 more Redfin users looking to move into the city than looking to leave, versus last year where they had about half that amount. And these aren't just casual numbers, because in order to be counted in part of that 2 million user, the users had to be looking at 10 homes or more within a particular city, and 80% of their searches had to be made up within that area. So they are definitely people who were interested and, for the most part, not just casually looking. The heaviest interest from Redfin users actually came from New York, which is not surprising to hear. So if you know anybody who's thinking to come down from New York, DC, LA, San Francisco, Denver, Chicago, let me know. So for some of my own thoughts, we do have what's called the Mutual Mortgage Insurance Fund, and that's a fund that acts as an insurer of mortgages that are guaranteed by the FHA. And typically, the way that fund is funded is whenever a borrower takes out an FHA loan or a home equity conversion mortgage loan, the premiums they pay at closing as well as ongoing premiums typically replenish that fund. In a recent report that was released by HUD, an annual report that was released by HUD, they indicated that the Mutual Mortgage Insurance Fund capital valuations for fiscal year 2020 benefit from continuation of strong house price appreciation that eclipsed other negative economic developments. So housing appreciating the way that it did definitely assisted in the replenishment of that fund, as well as in the recent omnibus bill that was recently passed. They have also earmarked about $400 billion for that fund. And as a result, the current capital buffer that we have largely outweighs that we had back in 2007 financial situation. So looking at 2020's projected losses relative to our paying capacity compared to 2007's, we seem to be in much better shape with the MMI. So that, along with in this omnibus bill, an earmarked $1.3 trillion for Ginnie Mae, which Ginnie Mae, if you're not aware, their idea is basically to channel global capital into the nation's housing markets. And what they do is they guarantee investors the timely payment of principal and interest on mortgage-backed securities. Makes it much more attractive, much safer of an investment. They're actually the only security to carry the full faith and credit guarantee of the U.S. government. In addition, a recent Mortgage Banker Association release indicated that loans in forbearance, they had increased 1 basis point, but essentially they still sit at about 5.5% of loans that are in forbearance right now. I'll briefly go over some of that data, not to get too heavy. And they're showing that Ginnie Mae had a slight increase, Freddie Mac and Fannie Mae had a slight decrease, and then other loans in their portfolio that's in forbearance also decreased. Now, some of the good things is they also indicate that cumulative forbearance exits for the period from June 1st through December 13th. They found that about a third continued to make their payments during their forbearance period. They found that about a quarter were in a partial claim or had their loans deferred. About 16% when they reinstated their payments, they paid back their past due amounts when they exited their forbearance. 7.3 paid off their loan entirely by refinancing or selling, and it was only about 13.2 who did not make their monthly payments and did not have a loss mitigation plan. Now, mind you, this 5.5% figure is down from about the 8.5 mark back in late May, early June. All right, I think I will leave it there. That way we have something to talk about when I next see you, which will hopefully be soon. But note that for all these reasons and more, I do expect South Florida in general, but South Florida to do quite well this year in terms of real estate. I encourage you to share this video with anybody who you think would appreciate it, especially anybody who you think is interested in buying, selling, or renting anything down here in South Florida. Until next time, please stay safe, take care, and know that I'm rooting for you. Bye, guys.